Welcome to Tracking IPDA. Price action this week was very interesting to say the least. When IPDA has somewhere to go, she goes and she won't always offer you a chance for a setup. I learned how to be still. Day trading isn't every day or even every week trading. When we get into trading, we think that we must constantly be in the markets. And if we're not in the markets, then we're missing the move and then we have to be in the move. And the reality is that you really don't. It's okay to sit on your hands and do nothing. Your setup will not always be in the charts. And as hunters, we know what we're looking for and we do not engage in the market until we see our setup. You become a different kind of trader when you adopt this thinking. The financial markets can feel like a casino, always late, always busy, and you don't even know if it's day or night. You have to control the variable, and you are the variable. You, the trader, you are the variable. ICT once said, once you're in a trade, that's outside of your model, then you're in there blind. And as cruel as this may sound, you cannot hunt efficiently if you're blind. Let's be honest. I finished the week with a 1.9% decrease in equity. I lost $475. I'm not crying about it. Are you? And overall, we're still up on the account 23.8%, which is $5,960. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal line, which represent the time aspect of trading, the most important tool you need to track down IPDA. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your higher time frame direction is bullish, and vice versa. Your probability of winning reduces significantly when you go against the high time frame directional bias. We're going into this hunt with the understanding that you guys have already arrived at your higher time frame directional bias. This is a hunt purely for just setups. To the hunt. Let's go. Monday, June 10th, trade of the day breakdown. We had a lunch session sell formation. As always, we start with the news, but on this day, we didn't have any economic news, hence why this day was not included in the overall weekly profit potential. Let's break down this trade, okay? So lunch session, we had price trade above a key high, displacement lower causing a market structure shift. The displacement leg lower has a fair value gap SIBI near the swing low. We wait for a swing low to form to anticipate execution. We had the swing low formed right here. For execution, we're looking to enter on a fair value gap created in a displacement leg that took structure at or near the 50%. And as you can see, you would have been tagged in this. You would be getting in on the consequent encouragement because that's the first premium array above the 50% level. So you would have been tagged in this trade at 1241. Is it 1241? Well, if you wasn't tagged in here, you definitely was tagged in here at 1241, breaking even at 102. Gain at that trade at 118 for a total time of 37 minutes in this trade. Drawdown in this trade was 31 tick for a 6% bagged and tagged. This was a counter trend trade. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is the lunch session. We have the range. We're in the middle to upper quadrant of the range. We're in the premium for a sell. And we also have liquidity. We have this short-term high created in front of the consequent encouragement. We have liquidity created in front of the fair value gap, making this 3 out of 3 for a high probability trade that netted you 6% for the day. The model states that we're looking for days where there's a high to medium impact news. So this trade would not have count. You wouldn't have taken this trade, but obviously on a different account, you could have took this trade. Wednesday, June 12th, trade of the day breakdown. We had a PM session buy formation that failed. Let's break it down. As always, we start with the economic calendar. And as you can see, we had high impact news coming out 8. We had FOMC minutes at 2 and 2:33. So after the FOMC minutes was released, we had price trade below a key low. It was a lunch session low. Displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that took the structure, okay? And we like to enter if we're buying right below the discount array, right below 50%. And as you can see, we had the high of the fair value gap right here. So you would have been tagged in this trade at 243. You don't get to break even. You're taking out that trade at 249. Total time in this trade was 6 minutes. Drawdown in this trade was 114 ticks for a 2% drawdown. Even though you took a loss, Let's look at factors that made this a high probability trade. First, we have the time aspect is the PM session. We have the range, we're in the middle to lower quadrant, we're in a discount for a buy. So we have the range, and also we have liquidity. There's liquidity created in front of the BISI right here, this short-term low. That's liquidity. So 3 out of 3, making this a high probability trade. And even though you took a loss, that is part of the game, okay? That's the only thing promised to trade that you will lose. Like I said, control the variables. Friday, June 14, trade of the day breakdown. We had a PM session, sell formation, a counter trend trade. Let's break it down. As always, we start with the economic news, and as you can see, we had medium and high impact news coming out at 10 p.m. session start. We trade above a key high. We have liquidity taken above a key high. Displacement lower, causing the market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. And as you can see, the first one above the 50%, we have the high of the SIBI right here. So you would have been tagged in this trade at 145, breaking even at 216, taking out that trade at 217 for a total time of 32 minutes in this trade. Drawdown in this trade was 36 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we have the time is the PM session check. We have the range. We're in the middle to upper quadrant of the range. We're in the premium for a range check. No liquidity created in front of the SIBI right here, but we do have 2 out of the 3, making this a high probability trade. I actually did get into this. I did get into this trade right at the high of the SIBI right here, but I moved my stop loss to break even prematurely. As you can see, when price got here, in my eyes, it hit the minus 0.5. So right here, I moved to break even, and it came back and took me out. And as you can see, you would have been hitting TP. So moving forward, I'm going to make sure I have a line drawn out at the minus 0.5, and I'm only waiting for price to trade to it or through it to move my stop loss. But that was the trade for that was the first PM session trade for Friday. We also had another one. Let's get into that. So Friday PM session also offered us another sell formation. Let's break it down. We had liquidity taken above the key high, displacement lower, causing the market structure shift. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. And as you can see, the first premium array that's above the 50% was the high, what the consequent encouragement of the SIBI right here. So you would have been tagged in this trade at 329, breaking even at 343, taken out at the same time 343 for a total time of 14 minutes in this trade. Drawdown in this trade was 15 tick for a 6% bag and tagged 12% for the week, for the day. Let's look at factors that made this trade a high probability trade. First, we had the time aspect is the PM session check. We have the range, we're in the middle to upper quadrant, we're in the premium for a sell check, and no liquidity created in this setup, but we do have 2 out of the 3 matching up to make this a high probability setup, netting you 6% for the day. This week I really had to learn how to sit on my hands and not engage in the market because my setup was not showing. I did feel myself falling back into old habits where I would be anxious to get in a trade because the market is moving and I'm not in it. But it's okay to sit on your hands and just wait for your setup, okay? When we're hunting the setup, we need to see everything that is in the model for us to engage in the market. If not, like ICT said, you're in the trade blind, and that's what leads to fear and greed in trading. And for those of you wondering about my funded account, I still have access to that funded account. My number one priority right now is protecting my access to that account. So I'm sticking to the rules and I'm making sure that I'm doing everything I need to do so I can keep access to that account. Top Step requires you to have 5 winning days of over $200 before you can reach your payout. I'm at 3 days now. 2 more days and I get to my first payout, which is the goal to get to my first payout. So an update on that funded account. I still have it. I'm still trading it and it's still active, okay? We're working on getting to that first payout stage, okay? When I get there, don't worry, you guys will be the first one to know. That will be all for Tracking IPDA this week. Thank you for joining us. Join us again next week, all right?